Welcome back, everyone. Today we're diving deep into one of 2025's most anticipated tech IPOs. The design software unicorn Figma is about to hit the public markets on July 31st. After the explosive CRCL IPO that surged nearly 10 times in just 10 days, all eyes are on Figma to see if it can replicate or even surpass that success. But Figma isn't just another software company. It's revolutionizing digital collaboration and reshaping how teams build products remotely. So, is it a sky-high bubble or the real deal with solid fundamentals? Let's unpack the numbers, strategy, risks, and why this IPO could be a game changer. Figma is entering the IPO arena with huge momentum. Remember CRCL? Its IPO skyrocketed 10 times within days, rewarding early investors handsomely. Now, Figma, trading under ticker FIG, is set to debut on July 31st, targeting a price between $25 and $28 per share. What's especially interesting is the backdrop. Adobe tried to acquire Figma for a whopping $20 billion, but regulators stopped the deal, leaving Figma to chart its own course. With a valuation of 24 times revenue, many wonder, is this just hype or genuine long-term value? Insider VIP investors on StockWe are already snapping up shares via Robinhood, signaling strong confidence. If you missed CRCL's ride, don't make the same mistake here. Figma isn't just a design tool, it's becoming the backbone of digital collaboration worldwide. What really sets Figma apart is its fundamental rethinking of design collaboration. Unlike legacy tools that rely on clunky export-upload feedback cycles, Figma enables real-time, multiplayer design editing, perfect for the remote-first work era. This innovation forced Adobe's hand, forcing them to abandon the acquisition and concede defeat to Figma's platform dominance. But Figma is no longer just a tool. It's evolving into a full team-wide operating system. Industry giants like Netflix, Stripe, and Duolingo, plus over 95% of Fortune 500 companies, rely on Figma daily. It's clear Figma is not only redefining design workflows, but setting the new standard for how modern teams think, build, and ship products together. Digging into the numbers, Figma's financials are truly impressive and rare in SaaS today. They posted $821 million in revenue over the past year, growing 46% year-over-year, with a stellar 91% gross margin. Even more telling, their operating margin sits at 18%, and cash flow margin is an impressive 28%. These numbers reveal a company that's not just growing fast, but doing so profitably, a rarity in tech IPOs. Their net dollar retention rate is a staggering 132%, meaning existing customers keep spending more, showing strong product stickiness. Globally, 85% of their users are outside the US, and 53% of revenue comes from overseas markets. Plus, 76% of clients use more than one Figma product, reflecting deep platform engagement. With high switching costs and enterprise lock-in, Figma is primed for long-term dominance. Figma is shaking things up by choosing a limit price IPO rather than the traditional market pricing approach. This means investors must name their own price to buy shares, a smart filter designed to attract serious, long-term believers instead of short-term speculators. If you think Figma is worth the $20 billion plus valuation Adobe once offered, you'd need to bid over $41 per share. Also intriguing is their SEC filing mention of Fig tokens, a nod to possible Web3 integration. On top of that, the company holds a Bitcoin ETF and may boost crypto assets up to $100 million, signaling a bold embrace of digital assets. Figma is essentially asking the market, are you willing to pay up for genuine long-term value, or will you chase short-lived hype? For long-term investors, the rewards could be substantial. Of course, with great opportunity come risks. The rise of AI tools that can bypass traditional UI design could threaten Figma's core value proposition. Additionally, the lofty 20-plus times revenue valuation puts pressure on continuous high growth to justify the price. Their expanding global footprint brings complex regulatory and operational challenges, especially regarding data privacy and compliance across regions. Figma's emerging growth company status means certain disclosure gaps exist, adding an element of uncertainty. However, the founders still control over 51% of voting power, ensuring the company's vision stays consistent long-term. Investors should weigh these high stakes carefully. The rocket fuel could propel Figma far, but the flight path has turbulence ahead.